So I spend a fair amount of time in Silicon Valley, and I come to Hong Kong fairly regularly, maybe 5 times a year. But I spend the majority of my time in Silicon Valley, and the talk around the valley now is that we're really in a tech bubble, that we're in this bubble economy now. And so I'd like to get your views, the panelists' views on where we are. Are we in a tech bubble now, and is that a worrisome thing? Are we going to go through the whole .com thing again, or where do you think we are? Anyone can start. Jack?
Okay, I
Jack,
actually went through the bubble for my first, second company, Interwoven, so that was interesting. And certainly, I mean, the valuation is out there, right? It was the 19 billion WhatsApp and everything else being multiple billion. If you're only worth $1 billion, you actually haven't made it yet. And that's kind of the problem. I think one thing that's really different today is that these companies are very lean and mean, right? So if they are not, you know, worth that much, and that's probably true, but they're not going to die like the last .com. And you know, the company, even just my own perspective, Interwoven from 0 to first paying customer took $4 million to do, right, back in 2000 and 96 to 2000. When I did the second company, Bayno, it only took $1 million from nothing to the first paying customer. And I recently started another company, and from the first line of code to the first million users, it took only $250,000. So it's a 4x drops every 7 years. So these companies, you know, if Instagram was not bought by Facebook, you know, they're going to be around for a long time, right, with the funding they have. So that the bubble is not going to burst.
Well, I would say that there might be a bubble in terms of valuation, but probably not in terms of innovation. I think there's going to be a huge upswing in terms of innovation. Also, like, just to reiterate what Jack was saying, I think WhatsApp, they had, what, 15 employees, is that right?
WhatsApp is a 50.
50
50,
employees,
yeah.
oh, sorry, 50 employees. So, yeah, you can go a long way with the funding right now.
Well, I think the first question is, are we in a bubble here or versus other places? Talking about Silicon Valley, I've definitely decided to move all my activity here because I actually think I went through the bubble in 1999, and I'm starting to feel that this is exactly like Groundhog Day, and I don't like, you know, living Groundhog Day. So I think we're definitely in terms of valuations in bubble territory in the United States, and the more interesting question is when you've got kind of billionaire young 20-somethings kind of dictating what people are doing in terms of building companies, because everybody thinks that they're going to write a big check if you know, and buy you. I think the smart thing is not to be thinking like that. It's to be thinking what amazing innovations are happening to do something that has happened in the real world forever, to do them, you know, quicker, better, faster, cheaper, and to make money doing it. And if you think about those questions and you're passionate about doing them, then in almost any market, and that includes a distorted financial market, you're going to find wonderful companies, just like Sequoia did in 1999 when they invested in Google, and just like we did when we started eContext, you know, 15 years ago in Japan. You know, I think you just have to kind of think about whatever the financial situation is. Just, you know, build real companies. So, but I don't think there's any bubble going on here. I think there's amazing innovation and great potential here. So that's why I want to seriously consider doing some investments in Hong Kong.
Rebecca, I think you had some comments about having lots of accelerators popping out all over the world. So
Yeah.
I could jump in since I've started 3 of them and part of the party here. I think when it comes down to accelerator programs, there are definitely, you know, a proliferation of incubators and accelerators, and actually there is some semantics that have to be discussed about what is what, in particular in the lights of one of the first with Y Combinator, which is actually very specific in terms of its location and the way it works. But nonetheless, I think it's still a good thing to see more and more of those, even though they will have to find the resources for themselves to survive over time. They are really educating people about how to build companies or how to build products, and that over time will create better entrepreneurs that hopefully will solve better problems. So despite having a lot of them on the planet, actually, they are kind of replacing the university little by little. We got with Accelerator, we're compared a lot to university, which is very interesting. That when you see someone from an academic background coming over to our office, they will always mention, "Oh, you're competing with us," which is very strange since we are investors. So that trend is interesting for the future, and the more the merrier at the moment.
I want to comment that assuming there's a bubble, there are certain things that make a bubble useful. For example, it's sort of a validation of certain business models. And at any time, there are sufficient number of investors who want to look at early stage deals. If there are bubbles, some of the larger deals become too expensive. A lot of incubators and accelerators will pop up to invest in smaller company, younger companies. And we also tend to see larger VC funds who used to only invest in $5 million, $10 million deals, increasingly looking at early stage deals, just because some of the other deals have become too expensive. Well, we are Silicon Valley lawyers, but we are in Shanghai. We travel to Beijing and Shanghai a lot. We see that there are a lot of very healthy, active, early stage investment deals, even though typical Series A's these days oftentimes are more expensive than California.
So I want to jump in on the bubbles side of things. I think in terms of valuation, yes, it's going up, but I think what I'm more concerned about is the actual bubble in terms of entrepreneurship, where with the ecosystem growing and all that, we start to have a lot of people coming into the circle. And from an investor perspective, it makes it more difficult and challenging in terms of me finding the right entrepreneur, because they come in and say they do a startup, but then it's probably more effort for me to vet and understand what they're really into. So that to me is a bubble. But for that fact, I actually enjoy it, because I think the more the merrier for now. Yeah.
It's true. It seems like everybody's got a startup today.
Yeah, actually, it was kind of interesting. I was taking my son to looking at college last year, and I went to Princeton. With all the fresh high school people coming in, and the first topic they talk about is entrepreneurship. So Princeton University talk about entrepreneurship, and then my son's high school has hired a full-time staff called Director of Entrepreneurship. So that's really sort of how much bubble that's going on. But I think it's actually a great thing.
I think valuation certainly has been going up, but I don't think there's a bubble here, at least not in this region. My colleagues in the United States may think the bubbling effect is slightly bigger than in Asia. But the fact is that we are seeing day after day young entrepreneurs are doing something that's real. Right? I think it's different from perhaps the 1999 and 2000 times, is that every company that we met that the founders are doing, it's not like they show you two pieces of paper. They have something very substantial and real. And I think there's a lot of internet and mobile internet's impact in the society. It's just still at the beginning of its development phase. So to me, I think as a professional investor, whether it's a bubble or not, it's actually not a question that I ask myself. I don't care whether there's a bubble or not. What I care most is that is this company, is this entrepreneur creating something real that has value, whether it's product or services that customers are willing to buy. And if you put things into a bigger scheme, let's say you invest in a Series A company, it used to be $10 million post-money valuation, now it's maybe 20. But if this company can become a $1 billion company, 10 million or 20 million becomes less relevant. So the more important decision is still, do you believe this company has the potential to become a $1 billion company?
Okay. Are there any sectors that you think are overheated right now at all? Any particular technology sectors that are overheated, have too much investment going into one area? I think for a while, everyone jumped onto the, well, crowdfunding became very hot. Bitcoin is now hot. You know, is there any area now that you think is too hot?
So here comes the fun part of early stage investing, I think. So from an investment standpoint, you definitely want to stick with things you know. You know, that makes sense. But with early stage investing, I think it's interesting that you can kind of, if you can embrace some of that risk, you can kind of step into a new area with a bit of investment and try and learn and experience from that. I think that's something we cannot take away from any traditional investment. So, you know, in terms of investment, yes, stick with things that you know. But I think within that scope or outside that scope, you can actually take a bit of risk and try and learn a bit in new areas. Yeah.
I think in Silicon Valley, certainly it was, you know, social game was very hard for a while. Now it's really cold. Enterprise, social, you know, taking consumer technology, enterprise was really hot. Now it seems to be overfunded. I think, but there's always things that we haven't heard about that's actually emerging that's really interesting. And I think the fundamental thing is with the cloud, with the, you know, smart devices, and with crowdsourcing. So a lot of the traditional industry is fundamentally being disrupted. I think that's actually very, you know, big market that someone is doing something new.
So on disruption, just from an investor's point of view, I think the difficult area, I'm not saying that it's overheated, there's a lot of mileage to go on this, but about 20 quarters ago, there were no such things as apps. And so now, there's about, I think, 2 million apps out there, and to get an app going, you really need 1 or 2 or 3 smart people to really get it going. So there are a lot of startups that they have the hottest, you know, health app or the hottest, you know, fitness app or the hottest, you know, whatever app. And I think as an investor, that's hard to evaluate in terms of, you know, whether it's going to really take off or because the startup, there's no real barrier to entry in terms of that startup. But I think it's very difficult as an investor to evaluate just, you know, you're not going to get the Instagrams, you know, like Color. Did anybody know what Color was? I think Color was funded, you know, with what, $40 million, and then Instagram had, what, nothing, right? $1 million or so, and then it was eventually sold for $1 billion, right, to Facebook. So anyway, that's just a note of caution in terms of, you know, people coming to you and they have the hottest app.
I think one very interesting indicator of whether things are overfunded or not is the behavior of entrepreneurs and also VCs. So if you look at sort of 2006, the coolest thing you could ever do was to try to get an article on TechCrunch. And, you know, I mean, that was a behavior. And if Michael Arrington liked what you had, that was, you know, that was a reason enough to have a party. But
I was at Red Herring when it was, you know, you had to get it in Red Herring magazine.
Okay.
Yeah, that was.
Now you have to get into Silicon Dragon.
Oh, yeah, that'll be the future, right?
So we led the Series A for a company that launched Flippergram, which became it's sort of hovering around the 4th best, most downloaded app on iOS for the last several months. And all I can tell you is that we never went out. We, being the founders, never went out to TechCrunch. They didn't even, they've talked about the possibility of maybe there was a Series B, which nobody's going to comment on. And everything's just been incredibly quiet, probably until now. So, and that kind of behavior I'm seeing all over the place. Oculus didn't really make a big deal about, just the level of trying to get hype and publicity isn't what it was. So that probably suggests that people think that things are overfunded and they don't want to attract more competition.
There seems to be a lot more deals getting done in stealth mode.
Yeah.
In fact, Jack, you just went through that, right?
Yes. I think you can keep it under the radar a lot longer. I mean, a lot of the company GSR invested were like that. We didn't really publicize, the entrepreneur didn't publicize. I mean, the one way we judge these companies is really by looking at the tractions. Right, you gotta prove tractions. There's really no other way. Even with a good track record, Color example you mentioned, doesn't really mean this person or this team can actually make something happen. So until that happens, and then, then you don't really invest. Even by my own company, the fourth company, we didn't really go out to look for money until we showed the investor we have 1 million users and going up to 10 million, right? And then you can really show it. And then you still don't tell the world. I mean, we didn't tell the world until we hit 5 million users. And then we actually already hit 10, but we told the world that we only have 5. So that's how you do the game now.
And you actually didn't announce it until after you got venture capital financing.
Yeah, we actually hid it for like 3 months, 4 months.
Right, okay. So where do you think Hong Kong is right now in terms of its tech and venture capital scene? Is there enough venture capital angel investor money now in Hong Kong? There certainly seems to be enough tech entrepreneurs, but is there enough VC angel money here? And
we actually do a lot of early stage investment deals in Hong Kong. We counted that last year we did around 10 to 15, and the companies were pretty exciting. But as far as we know, the later stage, larger Series A, Series B round are really not there yet. So this sounds like an opportunity for VCs.
So personally, I'm definitely seeing more seed capital. So coming from 3 different areas, I would say. First of all, from second generation family offices, where they run a family office in China, they want to divert it to new asset and all that. That's certainly encouraging to see. And secondly, I'm definitely meeting some VCs now in Hong Kong, and these people are really hands-on VCs. They want to help contribute and build the ecosystem. That's great. And third, and which is interesting, is that I'm starting to see a lot of venture arm from corporations, MNCs, who've been around in town for a long time. They know our edge. They've been doing global business. I think they are a perfect match for us to have in Hong Kong because they know our advantages. They know our edge and niche, and they can help kind of bridge that gap and make things happen, basically. Yeah.
So I was going to say, last year there were about $6 billion that were raised for venture funds. There was actually, surprisingly, there were 160 funds raised. I thought that was a really high number. And in Hong Kong, there were none. And in China, I think that accounts for about 50 of them. I think at the height, it was about in 2012, which surprises me in terms of the dates, there were about $20 billion raised in venture capital funds. But I think more the indication, of angels and family money coming in, I'm not sure that they're coming into venture, but there is a source of capital that is just ready to chomp out the gates, which is, if you look, I think there is a number for something like 358 billionaires in China right now. And so I don't know I'm not sure that there's been any attempt to gather the number of hundreds of millionaires out of China. And the percentage of offshore RMB is so low. Hong Kong right now is an offshore RMB center with about 10% of its deposits in offshore RMB. But a lot of this money, a lot of this wealth accumulation out of China is not coming out yet. And China's going to slowly allow that to trickle out. Nonetheless, I think this is an enormous source, and I know that they're looking at venture capital or seed investing, especially in light of how well Tencent has been doing in terms of innovation, where Alibaba is coming out in terms of the IPO and so forth. So I think there's a huge resurgence of interest in the ventures sector, and there's going to be a lot of super investors that are going to be able to not only up with the first round of angel investing, but they'll have the capability to go into multiple rounds. So that would be an interesting source of capital, I think, coming up that is not going to be apparent in venture capital money numbers that are being published.
So when I came to Hong Kong, when I set up Mind Fund in 2010, actually the reason I came to Hong Kong was just because it was a cool place to live and to, for my kids to go to school, and I thought it was a nice base to be able to do deals in Japan and Silicon Valley. But about last September, a good friend of mine, Titus Mikalski of Fresco Capital that Allison's a managing director of, he said to me, this is, he basically said in so many words, it's almost sinful that I'm not getting involved in the Hong Kong ecosystem. I asked him what was this Hong Kong ecosystem, and he opened up this the gates, and I met Felix and just many really amazing people who are both entrepreneurs and seed funds who have just been putting a huge amount of energy into building a real community, a real ecosystem. And there's no doubt in my mind after 7-8 months that something's happening here, and we're going to write our first Series A check next month. So I'm all in. I think it's great.
Good. Let us know what the deal is when you're ready. So what does Hong Kong lack then? Why doesn't Hong Kong have a Baidu, Alibaba, Tencent?
Tencent is listed on the Hong Kong stock market.
Okay, a listing is a listing.
I think role model probably is really sort of the hardest thing to start with. I mean, I think in Silicon Valley you have tons of role models. We do startups really not in the vacuum, right? We learn from someone we can personally, work with. I think China benefited from some of the returnees worked in the Silicon Valley and then went back, and China was a big market, so you can actually build big companies. And then a lot of the second generation, third generation startups that we're investing are really sort of employees, the early employees of those companies. Hong Kong, traditionally been a trading hubs and financial center, and there really no startup role models. And I was hoping that some of the panel earlier on some of the returnees from Silicon Valley can actually create a big company, and then people can learn from that. And short of that, it's going to be difficult, even as an angel. So I do a lot of angel investment. We invest in about 30-some companies in Silicon Valley in the last few years. But I wouldn't dare, because I don't know who's going to do the A and B here, right? And so my money may actually go wasted.
I think, quite frankly, notwithstanding what Cyberport is trying to do, it's the ecosystem that is not proliferate enough. I would say that the irony is that Hong Kong is an entrepot. Everybody's like, you're an entrepreneur, right? Just from the get-go. You can, if you want to start something, it's very easy to do that here. And there's enormous amount of government support towards that. Invest Hong Kong, Cyberport, there's money going towards that. There's money going towards creativity and so forth. But I would say the number of engineers that are coming out of school matters. In terms of how you bring it to market matters, in terms of that ecosystem. Having said that, there have been some fantastically successful startups here. Like Yatsu is up here. He's
definitely a role model.
Yep, absolutely. And Perception Digital is out here. And I mean, there are a number of very successful technology startups here.
I think market still is... to me, I think the number one reason why Hong Kong, you haven't seen a Baidu in Hong Kong, a Tencent in Hong Kong, or even a VIP shop in Hong Kong, right? So if I come to think about it, I think it's really, I cannot think of too many names where the company is based in one place and then the market is not there. If home market is not your first market, I think it's very difficult to become a substantial company. So think about Singapore, right? Singapore, Hong Kong. I think both Singapore and Hong Kong have great overall market economy system, but on the internet, or at least the consumer internet, or the pure consumer space, it's just too small a market.
Yeah, but it's right at your doorstep, right over the border, right?
It's different.
It's not like you have to jump on a plane or something.
Well, we have seen over the last few years, we have seen some, Hong Kong entrepreneurs that have their companies in Hong Kong trying to serve the mainland China market. It's very tough. But last week we met this entrepreneur who's a Hong Kong native, and he's based stationed in Shanghai, right? He's very successful running his business in Shanghai, but he's been doing that for 10 years already. And I think there is probably an equally smart, capable person in Hong Kong, but he's lives in Hong Kong, and you just cannot serve your customers that well when you are in Hong Kong.
But there are a couple things I think are changing though. So I think with the digital economy, you can actually potentially serve the world without being physically there. Now, if you truly go after, GSR invested a company called Fund Plus, right? It's kind of, it's a basically supersized Farmville, right? But the initial market was in Poland, right? The team was in Beijing, but had no idea because the farmland, the cow growing and milk and cheese, and that was sort of more of a European culture. So they actually started going after that market and then grow into sort of the Northern Europe countries and then become very successful. So, but you have to have a mindset going after one market first, right? So the Hong Kong case, I think, definitely don't go after the Hong Kong market, right? If you want to live here and work here, you need to go after maybe the China market if you are more of affinity with the Chinese market, or you go after global market, US market, and which is very different from the Chinese market. So you have to pick one battle, but don't pick the battle here, right? Much like the Taiwanese company never really decided that Taiwan is their market, right? Taiwan was never their market, even for those international brands of Taiwanese companies.
So as long as we're talking about Hong Kong, and let's talk about the Hong Kong Stock Exchange as well as a viable option to New York Stock Exchange or NASDAQ as an exit option. Where does the Hong Kong Stock Exchange fit into this equation for China companies? Is it a good exit avenue, and if so, for what kinds of companies? And I know Hong Kong Stock Exchange has been very competitive with other markets lately. So what is your view of where it fits in and where it makes sense for a startup to go public here in Hong Kong?
So
Alibaba notwithstanding.
So having spent time at the strategy office in Hong Kong Stock Exchange last year, I would say Hong Kong is in an enviable position in terms of a market to go listing. I mean, they're very aggressively pursuing. They have an excellent IT center here and also across the border. There are alliances with the Chinese markets. I think that there are some, I mean, with Alibaba, you can see that there were some huge issues that came up in terms of just governance and so forth in the rulings. But I think that the Hong Kong Exchange just acquired LME last year, and that was also a move towards this being a real competitive stock exchange. And it's easy for the Chinese to do this here, so I think that going forward, this could be a superb financial market, you know, where companies may even want to have dual listings after they have a listing in New York or elsewhere. I think this will be a place of ease to be able to do that, and the stock market here is definitely prepared to do that.
Yeah, Adam, you wanted to add something?
Yeah. So just before I directly answer that question, I think one of the things that we often forget when you think about how Silicon Valley developed and changed the world is that there was a fully functioning, liquid stock market in New York that could take incredible companies and provide a world-class exit mechanism for world-class companies. And I think if you look at Hong Kong, potentially exactly the same thing exists. If there's an incredible stock exchange which is world class. I was involved in taking a Japanese company, which I'm on the board of, which could have gone public in Tokyo. The stock market was is in great shape, but we took it public in Hong Kong because we had Pan-Asian ambitions, and for the strategy that we've outlined, it made much more sense to go public in Hong Kong, and that proved to be the right. That definitely proved to be the right decision. And I think if you just look a bit more upstream in terms of early stage and slightly later stage startups, the fact that we've got a wonderful world-class stock exchange here is terrific.
Also, the Hong Kong Stock Exchange or the public capital market in general has certain advantages compared to the US. Traditionally, we haven't seen a lot of China-based technology companies getting listed in Hong Kong, but there's clearly a lot of potential. Most of the, as an example, software internet companies from China have traditionally been listed in the U.S. Right now, there are a number of companies, including Jingdong and quite a few others, trying to get listed in the U.S. But once you get listed, a lot of the CEOs may find themselves in the uncomfortable position of looking at potential securities litigation and compliance headaches. In those regards, Hong Kong is probably a good venue for a lot of companies. Also, the cost for going public may be lower. And the other important thing is the investors in this market may be more appreciative or just familiar with these companies. So those are potential, but how quickly they will materialize is a big question mark.
I think more and more Chinese companies will look at Hong Kong as a very, very good stock exchange, as a very, very good listing place. Out of our portfolio companies, I would say the number of companies that are hoping or planning to be listed in Hong Kong is increasing year after year. And this applies to, of course, most of the consumer companies, consumer brand companies or consumer retail companies, consumer services companies. Even the internet companies are starting to think that maybe they should just get listed in Hong Kong, right? And previously there was only one hurdle is you have to have certain amount of profits over the last 3 years, accumulative basis. And but now there are profitable internet companies that they can come out to the market. So I think we're going to see a lot more internet technology companies in Hong Kong Stock Exchange.
Better for an entrepreneur to go for the IPO or the trade deal?
That really depends on the entrepreneur's ambition, and also.
Is it all about ego if you go public? No.
I think in the older generation of Chinese entrepreneurs that I met with, they have bigger ego. Maybe they want to become a chairman of a listed company. But I think the younger breed of the entrepreneurs these days are very pragmatic. It's if one of the BATs offer good valuation, and they're still in their late 20s, early 30s, why not? They do the trade. After a few years, they could be a serial entrepreneur and found a second and a third, like Jack, and he can do 4 companies.
Yeah, let's switch gears back to the startups a little bit. Cyril, from where you're sitting, you're seeing all these startups coming into your program season after season after season. What are some of the big mistakes that you see entrepreneurs making? Is there any kind of commonality that you can draw, any kind of lessons that our entrepreneurs here in the audience could draw from?
I guess a lot of the mistakes have to be made. So the accelerators are here kind of to provide a curriculum for people to get by the most common mistakes. And I guess the first things first is always founders agreements. Which is always a very, very hot topic that everybody forgets about, who owns what in the company, which is kind of amazing, actually, that you still have those discussions, as they enter the program, or even I think when people hit the first funding milestones, and there's still a lot of notions in terms of everything that comes with it in terms of vesting and cliffs and all the technicalities of investments, which are really not in the minds of people. So there is a lot of education that has to be made here, and that's what people entrepreneurs are thinking a lot, obviously, about their product and not enough about their companies, I guess. And that's true at just every level. And so moving on and really focusing on their vision, looking at what problem they're trying to solve and what are the solutions they envision to deliver, and moving from there to building a company is essential. So. Putting in the mind of people that this is a long-term thing. It's a 5, 8, 10, 12, 15 years of hard work ahead. So having the basics covered and making sure that this is not going to stop with the product.
So I'd love to echo Cyril's point on that. I think from an investor standpoint, it's not often very easy to find a business that you like in terms of the people, the team, or the idea that appeals to you, and a market that's big enough to address. But then once you found it, then you look at the cap table, the agreements, and all that, and you realize a lot of them don't have it. At that point, that's really frustrating. So I think, in addition to the hardship going into building a startup and all that, I think it's important that we all understand the fundamentals are also, need to be built in addition to facilitate that.
Yeah, talking about the cap table fundamentals, as lawyers, we see this all the time, that startup companies, especially younger startup companies, are not careful enough about who they give their shares to. There could be minor founders or someone who's a consultant who provided some help to the company, or a angel investor who, not being very smart or mature, ask the company for too much share, and later on it might be a huge headache sometimes to clean that up, especially if the angel investor or consultant is not someone that's easy to deal with. I keep reminding our clients to watch that movie Social Network, because the two main themes of that company is two big litigations in the early days of Facebook, which dragged along for a long time. It's about early stage shares and intellectual property. I keep telling companies, if you screw up your capital, your share allocation, if you are not careful about intellectual property, small things can become big headaches. On the other hand, on compliance, on some of the other things, you may save some trouble to the future, but shares and intellectual property are very important.
And to jump in quickly, I think it's not only the entrepreneurs that need to be educated on these fundamentals. I think it's the investor myself. I need to be educated on the fact that when you understand the right structure and cap table and the right equity stake, make sure that the founders and the investor are aligned in terms of the incentive and objective to be that company. So I think it's on both sides, not just on one side.
Yeah, go ahead, Jack. You were going to say something.
I think the sort of the technical legal side, certainly I think those knowledge are important, but probably the hardest thing to do a successful startup really is the journey itself, right? Finding that product and market that you're going after, something you're really passionate about. I think a lot of the mistakes that I see, even looking at a lot of companies, hundreds of them in Silicon Valley, hundreds of them in China, and we saw a few yesterday in Battle of Silicon. And I think probably the most common mistakes the founders have is not to really go into the market that you want to do, and then touch them, feel them, interview the user, interview the customer, work with the real customer, right? Nothing is really abstract. I see way too many business plan or founder talking about big concepts and almost give you a market survey, but then when you ask specific examples, what are you doing? What's the use case? How exactly from A to B? And they haven't done it, right? So, and they quit their jobs even. And so how are you quitting a job without even knowing where use cases are? And then most of the successful entrepreneur really have to go through these iterations, right? The lean startup, you have to zigzag 100 times, 200 times. And in that journey, there's many, many impasses. You have to have this sort of grounded way to figure out, how to get through this Amazon jungle, how to pass this river, and there's tiger and lions in front of you. And that's actually probably the hardest for most of entrepreneurs.
How does the entrepreneur determine if they should just continue to bootstrap, or should they maybe go for crowdfunding or angel round, or how do they determine, what's the next best step? Let's say that they're going along just fine, and the cash flow is fine. They could hire some people, but should they actually at this point go outside, or should they continue to bootstrap? How do you make those decisions?
I don't think any company startup would actually feel they're fine, right? Every startup in the early stage is like near-death experience, right? And I think and also the founders are very lonely. I think we heard that. It doesn't matter how many times you do it, how many times you take a company public, next time when you do it again, it's that same experience again, right? And it takes really special a personality, right? It's, I mean, I call the, you know, startups inhumane, right? So you're on this lonely journey and humans are pack animals. So you really don't want to be there, but you have to be there to invent something. So therefore, sort of funding and other things are almost secondary in the sense that you have to, you know, figure out what are you doing first and make sure that's successful. So if you're a first-time entrepreneur, right, you have to, you know, a lot of people do it on the site, right? They build to enough point that they can prove to investors that there is something there, right? If you actually done it before and then you got some money, then you just jumped in, right? And then figure it out afterward.
I cannot agree more with Jack. I think one of the common mistakes I think the entrepreneurs make is to ask investors, what are the hot areas that you want to invest in? Which are the themes that you recently pay more attention to? I don't want to invest in an entrepreneur who's asking my opinion, what I'm interested in. I want to hear from an entrepreneur who tells me what he's interested in, what his customers are interested in, right? So that ties into what Jack just talked about. Funding is secondary. The first thing is, what's your business strategy? You need to sort that out first, and then you think about capital. Capital is just a resource, and then you have the investors. Perhaps you can view them as a human resource, as human capital, right? So if you need monetary capital and human capital to help you achieve your business objectives, then that's when you need to think about funding. But you shouldn't think about, if I do this, it will be easier for me to get a funding. If you have that kind of mindset, then I think it's very difficult to be successful.
Yeah, Adam?
Yeah, you know, I would actually just add to both of these gentlemen's points that, you know, part of this whole Groundhog Day experience that I'm feeling sometimes is you know, that it's now cool again to be an entrepreneur, and it's glamorous to be an entrepreneur. And I think anybody who's been through this journey will say it's many things, but it's neither, you know, it's not cool and it's not glamorous. It's sometimes you feel like you're walking through hell. And the people who've gone through it, you know, they're transformed people. And so if you're totally committed to this journey because you're passionate about doing something, then the people you would bring on board as your investors have to be people that fit with you, the journey that you're on. And I think one of the things that I think on balance, the incubators and the accelerators are a very good thing because they're bringing more potentially great entrepreneurs into the system. But one of the downsides that I've seen from this is that there seems to be a sort of an implicit kind of idea that you're training entrepreneurs for this thing called demo day, where you're pitching to, you know, investors, and the investors are going to either like you or they're not. And you know, and so some investor, guy came up to me, and the first page of the pitch was, I want $100,000 of your money, and you know, before he even said what he was going to do. And you know, and I mean, and that is what I would want to say to somebody like that is, you know, if you can say goodbye to your employees, and you know, you can do so with some partners, but you can't, you know, distribution partners or whatever, but you can't really say goodbye that easily to your investors. And so if you're going to bring on board somebody who as your business partner with financial capital, you better be bloody sure that, you know, that they're the right people. And I think you should do as much due diligence on us as we're doing on you.
So we're talking about human capital here. So do you think crowdfunding is a mistake then?
No, I think the side effect of crowdfunding is actually bringing on board those expertise that we need in terms of building a business. So it's not just like everybody suggested, it's not just funding, it's the people, the expertise, the customers, you know, the feedback that you need in terms of building a great business. So no, I think crowdfunding is a great platform for that.
I think there is also a difference to be made between crowdfunding and crowd investing. Although crowdfunding today, you know, means Kickstarter, Indiegogo, which is actually real revenue, and it's about testing the product in the market. And then there is crowd investing, which is conversation about the Jobs Act. So the semantic is the same today. It's me calling it crowd investing to make things simple. But effectively, you know, it's allowing anybody to invest into startups. Which is not legal today, is about to be legal this year maybe. in the US. So for you know, almost anyone or anyone being able to invest in into startups, and so that will impact, you know, venture capital and entrepreneurs in interesting ways. Although VCs are here to stay because of the human capital that they also bring. But that's for a longer conversation. On the crowdfunding side, it's tremendous thing actually, particularly for hardware startups that have been able to test out their market, get, you know, first confirmation that there is something there, and also get cash essentially to finance their tooling and everything else. So it's part of the explosion of hardware startups out there is totally due to crowdfunding platforms, and being able to bootstrap, essentially improve, you know, a few points on the way to build a scalable startup that, you know, this is working.
Just quick one. I think the jury is still out for sort of crowdfunding. I think my personal suspicion that the fundamentals technology startup is really bet on people, right, team, and that's very hard to sort of connect that dots until someone figured out, you know, this is whether the crowds can figure out whether this is the right team to bet on. You know, I think they're testing some markets for some hardware stuff, but in general, I don't know.
In general, you don't.
I don't know.
You don't
I
know.
think the jury is still out.
Oh, the jury is still out. Okay.
Yeah, I agree. I think that crowdfunding is fantastic for nonprofits.
Any burning question from the audience, just really quickly, because we got to wrap it up. Yes. What?
What about Oculus Rift? $2 billion acquisition.
There you go, Oculus. Yeah.
Is that not a jury in kind of?
Where's our mic? Yeah. Okay. Go ahead. Ask it again, please.
So the question was, what about Oculus Rift? They were funded on Kickstarter, and they were just recently acquired for $2 billion. And I mean, I'd say that's a pretty damn good example.
All the crowd financiers hate that deal because they say, you know, basically. But anyhow, yeah. What's your view of that? Yeah. Nothing.
Watching the development. Too early to give a conclusion. Watching the development.
Okay.
There will always be exceptions.
Okay. Another question, please, really quickly. All right, if there are no other questions, then we're going to wrap it for tonight. And thank you all for staying with us. Thank you to our sponsors, Cooley, KPMG, Cyberport, and our marketing and media partners, Invest Hong Kong, Web Wednesday, Thoughtful Media Group, Startups Hong Kong, Export Now Thai, and the IT Fest. And I hope that you all stay with us for our journey to our next destination as well. If you didn't pick up one of our postcards with our schedule of events, please do so. Also, if you recently joined the Silicon Dragon Circle, I owe you a book. So please come up here and grab your book. And thank you again. Thanks for your attention and your interest.